let's also see a overall picture in terms of how the FMCG companies are expected to fare in the first quarter of this financial year. Mahima tells us why.
Right. So overall, in terms of the revenue growth, there will be some revenue growth on the back of price hikes, but the value growth versus value growth will remain divergent. Overall, in terms of margins, they'll be under pressure. And this is because of inflation hitting the overall margins, both in terms of gross margin. EBITDA margins will also see contraction because of gross margins being under pressure, but that will also be on account of higher ad spends. Now, in terms of demand, there's gradual recovery that's taking place in the rural demand, but urban demand still remains under pressure. Well, companies which are expected to outperform double-digit revenue and PAT growth will be seen in Marico, Tata Consumer as well as Gillette India. Margin expansion also expected in ITC as well as Nestle. But companies that will underperform, there's negative revenue degrowth that will be seen in Imami as well as ITC, and significant margin contraction expected in Gillette, Marico, Tata Consumer as well as GCPL. Lastly, what lies ahead? Well, second half of FY26 is expected to be better on the back of rate cuts, tax cuts as well as the 8th pay commission coming in. To end with, Tata Consumer is expected to post its earnings today, and that's something that one should keep in mind. Overall, revenue and PAT will see a double-digit growth. Margins to remain under pressure. Revenue may rise around 11%. EBITDA may fall 3%. Margins to see almost a 200 basis points contraction, and profits may see a growth of 23%. Key things to watch out for: tea inflation plus impact of pricing interventions in the international market, and of course growing competitive pressure from the unorganized space. So this is the overall view of what you can expect from FMCG sector as a whole, and of course from Tata Consumer as well.
Okay, thank you for that, Mahima. Let me go across to Gaurang. Gaurang, first, Mahima did give us a detailed picture on how the FMCG companies are expected to shape up. Specifically, if you are seeing for today, Tata Consumers will remain in focus on the back of their Q1 numbers. First question would be on your key expectations for this stock, and overall, the FMCG space also, what's your view?
Well, Anushri, so, we all know that semi-urban and rural areas do contribute to a great extent as far as the volume numbers are concerned, the top line. Monsoons, as expected by the Met Department, are doing well. They have had a good spread as far as the pan-India coverage is concerned. A good productivity in terms of agri output would translate into good income for semi-urban rural India, and that will translate into savings and spending as well. Coming to the metro cities, well, metro cities have been contributing to a great extent. Tier 2, Tier 3 cities are also likely to do well, as the announcement made by the Honorable Finance Minister during the budget of no tax about 12.75 lakhs. This should also start showing ground level green shoots by October, November, December. That is the third quarter I'm talking about. And as a sector, we remain positive. On Tata Consumer Products, we have a buy recommendation. That's a disclosure from our side. Other than that, we have coverage on Colgate. You were discussing with your colleagues some time back, Marico, HUL, ITC. These are some of the other names, including Nestle and Britannia. We are positive on all these names as far as FMCG sector is concerned. And our sense is that, this quarter could be a little bit difficult for the FMCG pack. But second, third, fourth quarter should look much more stronger on fallback of volume growth as well as demand outlook.
Okay, so recovery expected in the subsequent quarters is the view of Gaurang. But Gaurav, your quick take as well in terms of any picks that you have in this space.
We are too bullish on the FMCG pack, and we expect that the later half of the year will bring some jubilation in this space. Dabur, Britannia and Nestle are the three stocks that we are clearly eyeing at. Dabur is where, at current levels can be a good buy for a short-term pick that can, levels towards 560, 580 are possible. For Nestle, it is just at the onset of a breakout. 2500, 2520 is a breakout point. Once that is taken out, the stock has good potential to test 2750 levels. For Britannia, I'm just waiting for a slight more dip here. Another 200, 300 rupees dip will get down to take it towards a very attractive trajectory there. So buy on dips on Britannia.